All right. Good morning, everyone, and welcome to this live intraday strategy webinar. Today is Thursday, April 21st. Mike Boutros with you back on the horn, and it is good to be back. Things are on the move. Hope some of you enjoyed that extended holiday break. It's a light crowd here in the room. Hey, Ureli and everyone in the room. Quick setups to go through. There is a good amount I kind of wanted to skim over, but what's moving is kind of been limited. So stoking out this last dollar pullback, finding some support here, but again, variable on the majors. So on the menu for today, we're going to take it from the top down. DXY, number one, Euro, Aussie, and dollar CAD from last night. Previous to that, we'll hit Kiwi. The Aussie Kiwi setup that we highlighted last week is still at a major level there. NDX, silver, some ancillary setups you guys were asking about with regards to sterling Swiss, SPX, and a quick look at Bitcoin. I highlighted support a couple of days ago last week, and we're still rebounding off that level. So no market data or any economic announcements for the remainder of the week, guys. So from the event risk standpoint, we're gonna be largely looking for just broader market sentiment. We've been getting some interesting earnings reports, Tesla and all the like, which has things on the moves, but broadly speaking, risk has remained rather well supported. We'll take a look at those levels today. Let's jump right in. Any other questions or trade setups? As always, feel free to throw them on the message board at any time. Here's what DXY looked like last night, and here's the broader picture for DXY of what we've been tracking. You know, the top side breach we saw above 99.33 was sort of the line in the sand, right? It was a really nice breach and weekly close, kept the focus higher. Two levels of interest we've been looking on the top side. We've been skirting just below them, guys. The 88.6 of the 2020 drop, excuse me, that's 101.42. The high week close from 2020, that gives you 101.94. So you can see a little bit of a waning momentum signature there, okay? Nothing too crazy with the divergence, but it's getting a little tired. We've been saying that for a couple of weeks now, but it's been back and forth. The exhaustion trade was sort of the focus, central focus, to see if we get a pullback. That pullback drove into support and held. Not much here on the weekly chart, but here's what it looks like on the daily. All right, so the uptrend, right? Still a little bit higher up. Again, there's that 2020 high day close, 100 spot 79. Little messy, okay? Keep in mind a couple things. We're heading into the last few days of the month. Next week is going to wrap things up for us. The topside breach that we saw, like I said, was a one-way trip. We haven't gotten any meaningful pullbacks. And the broader game is still constructive. It's just, are you still a little bit at the upper ends of the extreme? Are you at uptrend resistance? Here's what the intraday chart looked like, or here's what it looks like now, and here's what it looked like last night. So looking for that, was looking for a little bit of a drive lower towards that median line. We got it, drove through. Here's the recovery into the open. Like I said last night, if this is legit, all right, weekly open resistance is 100 spot 50. Nice round number. That's where we opened the week. Weekly opening range break, defense, that's going to be our near-term bearish inval, okay? If we are heading lower, that's where this rally should terminate. Now, another look at this, just closer in. We take just a look at this week's opening range, the 618 is right there. All right, so same kind of nice little nestled zone there. Yesterday's high basically is what you want to see hold. On the downside, support comes in still at 99.66, 99.63. This is a longer dated 1618, but it's been a very decent pivot in price. So watch that zone. That's the pivot zone. Anything beyond that, I think you look for a larger corrective approach. Till then, we're just looking for a pullback within the uptrend. Can I have a full screen? Hey, Ty, yes, sir. Full screen on the weekly. Looks like this. Intraday and daily. Right on, it says got it. So that's number one. I was hoping for a little bit more of a jarring effect when I come back here for the dollar to kind of give us a little bit more of a guidance move. Just looks like the top side is petering still. If you guys go back, as always in the reports, you remember that really strong upslope that we were following, right, in the previous update. Yeah, it didn't really give us the break that we wanted. And I always warn you about these, right? The break was just a pause. before we just continue to move higher. You didn't get any kind of inflection on that. So sticking with this slope for now, if the resistance holds at 100 spot 50s, 1 spot 57 to be exact, be looking for that resumptive move down towards 9960. That's DXY, number one. Number two, here's what Euro looks like as of last night, and here's what it looks like now. So first thing first, weekly charts, haven't spoken in a while. I want to take this from the top down. Hey, Ty, I think I have everything on there, on your list there, except for crude, which I'm still not playing those levels, but I'll show you what I got. So here's Euro. The level that we talked about last week, right before the break, was 108.31 is the 88.6 retracement of that 2020 advance. We closed last week. Here's another fake out. Closed last week below it. Here's this week's candle, kind of playing in that same range. From the weekly standpoint, there's nothing here except downslope support. Okay, this is a parallel of basic channel resistance. There's two in here. You can see that we're just kind of riding that downslope to the downside. Momentum is the same thing here, all right? Divergence, but that doesn't give you the time value. We could still continue to see this divergent signal hold on. Now, it is a stronger signal because both reference points are above 30. So the downside exhaustion trade is manifesting in momentum, just not yet in price. Here's what Euro looks like on the daily chart. Okay, so again, that sleeper 108.14, 108.31, we were talking about that for a while. We spent a couple of days back there, but yesterday I highlighted you to the fact that, well, we popped right back through, okay? And the significance of that level can't be understated. Again, a pair of fibs here from the 2020 advance and all the way back for the advance off the 2017 rally. That's the 786 retracement at 108.14. So it's a very decent pivot. The lows for the year, blah, blah, blah. Buckle below, buckle back above. As soon as we close there, we start to say, hey, let's see if we can't get a little bit more upswing on that setup. Here's what it looked like on the intraday trade. And again, here's what it looked like last night. So as soon as we broke the weekly opening range highs, took you right back above that same level, 108.14, 108.30, shifts the focus higher. We were at the median line last night, told you to take a look for that 109.20 level, which would complete not only a basic 38.2 of the drop, but a nice round high from last week here. We ran right into it. That's where we're pulling back. It's the same setup as the DXY. If this is going to hold, okay? Ideal scenario, again, rainbows and fairy tales, we find support right here into the open of US trade near 108.65, 108.60. Bearish, or excuse me, bullish near-term invalidation. I want to raise that. Last night I told you it was the weekly open. Now I want to raise it to 108.30. If we get back below this region, you kind of discount the breakout here. All things held constant, if we are breaking out near term for a larger recovery, we should find support ahead of 108.30. Okay, now on the long side, on the breach, I don't want to say tricky, but what I wanted to highlight was two different levels. First, the slope comes in somewhere right around 109.65. So I do want to be mindful of that. If you look to the left of the screen, guys, there's some swing lows there and a decent pivot in price near 109.65. Watch that slope. But the bigger region is going to be above 110. It's going to be 110.21, the 618 of the drop. Now, hopefully, if we get another kind of low here to fade for a bounce, you get another extension to measure that gives us another meaningful level near 110.20s. But that's kind of the super resistance, let's call it, in the near term here for euro dollar. No major economic data, like I said, of report or of merit. We got core inflation rates out of Eurozone today, came in at 2.9%, slightly weaker than the 3% expected. So maybe abating some of those concerns with regards to inflationary pressures abroad, but in generally speaking, guys, that story is not going anywhere anytime soon. Any questions on Eurodollar? It's number two. All right, let's jump right into Aussie. One of my favorite setups. I wanted to highlight this right where we were because the weekly chart, I'm not sure why we're getting those failed images, sorry about that. The weekly chart had us at a pivotal, making up words now, pivotal and critical region. Here's what Aussie looks like on the weekly charts. The level was 74, guys, 73.96 into 73.85. You have the, what was that, the May 2017 low week close, beautiful pivot in price year after year. It's the 38.2 of this year's range and the 52-week moving average. We've been watching this pivot region all year long. First on the way up, breakout gave us the advance into the new yearly high. Then on the way down, we started highlighting support here last week. It held. Okay, got a little dribble below, but it held. On a weekly close basis, again, trying to give us confirmation of the validity of the near-term trend. While above 73.85, you can't really get too bearish. You're above support, plain and simple. Former resistance, turn support. Fibonacci support, long-term moving average support, trend support, okay? It's all right here. And that's pretty much all you need to know on Aussie dollar for the last like 2.5 weeks. Here's what it looks like on the daily chart. First things first, beautiful pullback. This is a basic trend line support. This is the support line that you're looking at right here on the weekly charts, right? Same thing here on the daily. 1, 2, 3, 3 touch, confirms. 4th touch, further validity. So while we were watching this really strong uptrend, when that broke, look where we found support. Here's the rally. Now on the long side here, you're coming to some pretty important levels. The first one being 74.68, 74.69. It's a basic 38.2 of the drop, okay? Just above that, 74.82 is gonna be the objective April open, not Mike Boutros's opinion, not Jamie's opinion, fact. Okay, so that's sort of the threshold you would need to get through to suggest that there's a more significant turn in Aussie. Other than that, we've come off uptrend resistance or just ahead of raised ceiling here, coming into uptrend support. This is the first blip, looking for reaction into 74.82. Here's what it looks like on the intraday chart. Getting a little tight. Last night, it kind of like petered out real quick. Again, that's what the daily chart looks like. No change there. Here's the intraday chart. No change here either. We actually didn't make it into a touch of that 74.64. And again, 74.82 just higher. Seeing this real tight channel. Look, I'm not going to get into this real tit for tat with the near term on a trade like this late into a shortened holiday week. So that being said, on the downside, support would need to hold ideally 74, but 73.95 max if this is heading higher. So if you do get a little bit of a spill, like that's the max loss you'd want to see. On the upside, we'd still need a breach above 74.82 on a closed basis to validate a larger breakout, a larger advance. That would, in essence, guys, break us right back through the monthly open. And recall that for Aussie, here's your monthly open. Up, where is your? Right here. Yeah, this is the monthly open. I'm sorry. Back here. Here's your monthly open. You ripped higher. You sat on monthly open support for a while before breaking it and testing it of resistance. Further putting emphasis on the validity of that pivot right there. All right, so that's Aussie dollar heading into the close of the week. I would love to see a tap towards 74.82. We're constructive above 73.90 near term, really short term stuff. Like I said, if you break back below that region, you're kind of risking, a flirt with a break of the yearly uptrend. And that's not something I want to front run. So some caution here on Aussie. We're not out of the woods yet. The levels look good. Would love to see that tap towards 75, 74.80s. Looking to see if we can't get some kick on this into the close of the week. Any questions on Aussie dollar? All right, that's number 3. Number 4, please tell me some one of you took this trade while I was gone. Dollar CAD finally turned lower. Glad that Jamie got us into that one on the swing side of things. Looks pretty good. I have us coming into a big area of support, and I wanted to highlight that last night. Look, the weekly and the daily charts is doing most of the talking for me here. Intraday, I do have us below support, and like I said in yesterday's update, while we stay below this, technically you are looking lower, but boy, man, it's looking kind of tired. So let me take you back first to the weekly charts. And this is where things started to get sort of red alert for me last night. Here's dollar CAD on the weekly. So this slope, okay, hasn't been the most amazing pivotal slope, hasn't been earth shattering per se, but on a weekly closed basis, you have been getting some pretty decent pivots for the last 6 months, last 8 months, right? Here's the December high, here's the pullback right into January, here's the February highs. I mean, you can't make this stuff up. Here's the lows. So I'm inclined to give merit and warrant, some significant analysis here, watching what happens at that pivot into 2450s. It's very, very important. 2450s, by the way, guys, is the objective yearly opening range low. It's nothing special. It's your January low right there. So you have uptrend support for the upslope. You have longer term downtrend support, which we've been pivoting on for the last 6 months, and we're sitting right there. So look, on a weekly close basis, guys, well above 2450. I know that we're looking lower on the swing trade, but for me, on the near term, this is a level we need to pay attention to. If this downside breaks, Jamie's looking for what, like 2290s? I think that's, the level I have right below here is 2314, right above that. But first things first, we're at support right here, right now. Okay, that's dollar CAD on the weekly chart. Let's drill down deeper. Here's what it looks like on the daily. Does that interpretation, does that risk warrant some respect here? And again, I think it does. Here's what the monthly open looks like. You got that outside daily reversal. And guys, that was our last update on dollar CAD. It was right on April 13th, excuse me. It was the day the outside day reversal happened. We said, whoa, that's exhaustion, right? That's exhaustion. So the outside day reversal candle was the onset. You got a nice drop down, a couple of days of recovery, but nowhere near the yearly open. Couldn't even get a close near that before collapsing lower again. We're there now. Here again, here was the previous update, guys. You can always go back and check out how we've been calling this. Here's that 618. Here's the monthly open. Here we are now. Okay, so we're at a congestion region that we need to pay very, very close attention to. As I said in last night's update, there was the break of uptrend support that we were following all throughout the course of that first part of the month. Here's the lateral level of significance that we need to be paying attention to now. Okay, so it's defined by a couple of different things. These are my favorite Fibonacci confluence regions. The 100% extension off the high, the 618 retracement off the low, sprinkle some salt on there. You also have the April open, a major pivotal range from an objective standpoint. Building analysis of the week. Okay, I'll look into your commentary there, Ty, and I'll get back to you. Let me just kind of stick on this for a second. So right now, the focus is on what kind of pivot we get around 25. Like I said, into the lows right now, it looks like you're getting some divergence. It's below 30. It's a weak signal. If we get resumption, 2507 holds, I think, we're right on to that 23 and change on the downside. This is a huge pivot. But for me, right now, I need to see some really definitive price action here. I don't have anything in the way of resistance, guys, to way up into the 2580s. Well, let me take a step back. You could do something like this. I'm just going to put this out there to give you some sort of color on the decline. But even then, the 38.2 comes in right around those lows. So let's just call it like 2540s, right? Even if this were to give us a little bit of a correction. It's too close to say, bearish inval, but that's like where I'd want to see the max hold. You know what I mean? So possibility for some kickback on dollar CAD, some back and forth here. Don't want to see anything above 2540. On the downside, 2450 on the opposite side, and 2380s are your next sort of levels of significance on the downside. But I really like for this chart, guys, if you're looking at this into the end of the week, if you're not in the short already, by the way, whether it's on the swing side or on the intraday side, sit tight. It's not the time to start chasing. If you're in the trade and you're anything in 2610 or above, maybe a decent area to chip away. If you're taking it explicitly on the swing trades, guys, do not change those entries or exits. If you're a little bit more of a hybrid trader, or you've been trading both of our strategies, I'm looking for something here. I'm looking for something here. Truth be told, if we break and close below 24.53 on a closed basis, I'd want to see an accelerated move. If it buckles below this and starts to show, a tail down here, or we're closing the day and the week and we're not quite breaking, that's not what I want to see on a setup like this. This is a pivotal region, upslope support. If it breaks, expect acceleration. Any questions on dollar CAD? That's number 4. All right, number 5, Kiwi dollar. Haven't gotten involved myself on this one, but I have been following it with you guys on the intraday pages, and I want to kind of just give you an update on where this trade's been going. Here's our last update on Kiwi dollar back on the 13th. It was a break of a downslope that we were following, but I wanted to show you the previous update. Here's what it looked like on the 7th of the month. Again, guys, for anyone new to the room, I see a couple of guys leaking in here. You can always find the daily and weekly charts on every other update per asset. So if you come to the update and you see a Kiwi chart, you don't see the accompanying charts, just go to the previous update, you'll see it, and vice versa. Here's what the weekly chart looked like on Kiwi into the start of the month. Now, the breakout, the rallies that Aussie and Kiwi saw, this one was very rigid into the 50 of last year's high. Okay, it was 69.96. Just below that, we had 69.40, which was the 2019 objective swing high. Nothing fancy. We talked about resistance there for a while. It held. It held. Near-term support didn't have anything till 67, 67.33. That's the 2020 objective yearly open, and a basic 38.2 of the rally. We're there now. Okay, so while maybe have been a little, there may be a little bit of chop fest here, right, as we were going through the holidays. Trades like these where the weekly charts are just ping pong are worth paying our attention to. So what does that leave us? Besides patting ourselves on the back, where does that leave us now? Well, we're at support, and we're at a pretty major level of support. Again, the 2020 yearly open, that 38.2, don't take my word for it. Look at how many pivots we've inflected along that plane over the last 5 years, right? So Kiwi on the pullback at support on the weekly chart. All right, that's cool. What does the daily chart say? Well, as we highlighted again early in the month, when we were rallying into uptrend resistance, that's all we said it was a rally into uptrend resistance. The exhaustive trade was having us look for a track back towards support. Bullish inval for the broader picture, right down there. It's a very critical level. We talked about that. Here's the break of uptrend support. Fast forward a couple of days, we just rebounded off of that 618 retracement. Again, the 2020 yearly open. Here's the recovery. So what you see here added is just a basic retracement for the near-term decline of this month's range. Gives you 68.37 as near-term resistance on a basic 38.2 recovery. Here's what the scalp looked like last night, or back on the 13th. Here's what it looks like now. So a slight adjustment to the slope of the gradient. Instead of using that high, low, high, little bit of a poetic license there with a slight alteration, just matching up the support. So you have 1 touch, 2 touch, 3 touch confirms, and all the viable parallels kind of puts you in focus. Gives us a focus of 68.37. Again, that 38.2 of the drop now converges on downslope resistance. Bearish invalidation, what would put us straight on the bullish side of Kiwi, would have to be 68.90 to 69, this region right here. It's a bigger zone. I didn't want to shade it, but here goes anyway, just for the sake of clarity. That's kind of the bigger zone for me on Kiwi. So take the setup for what it's worth. Yesterday I was tempted of putting this on the update, guys, but I didn't like the way it played out. Here's your weekly opening range break. If this is your weekly open, you set a low, you didn't really go for a test of the weekly opening range highs, and that's what I don't like. Also, when the weekly opening range is not that well preserved within a extended or shortened holiday week, those thin liquidity conditions don't tend to put as much merit on it. So some of them were clean, you know, Euro, Aussie, some of them were great clean breaks. Not so much here in Kiwi. So kind of neutral. We're sitting at support. I'd like to see the recovery kind of give us a little bit of a kickback. It would give us a little bit more of a dollar push. If you do get dollar strength, it's kind of going to push this one. But at the end of the day, I'd like to see it, ideal scenario, at least towards the upper bounds there and look to reassess the trend from there. But on the near term, we've bounced off of downtrend support. We've made what looks to be a breach of the weekly opening range. Near term, looking for an exhaustion high towards 68.30s or thereabouts. Questions on New Zealand dollar? All right. That is number 5. Number 6. A quick question on Aussie Kiwi. One of you guys had brought this trade up a couple of weeks ago, or last week, I should say, back in the webinar. And I don't remember who brought it up. If you're in the room, go ahead and raise your hand. But good trade in the fact that we were asking, is Aussie Kiwi basically at resistance, or is this a breakout? Now, what looked to be a break of the monthly opening range here on the 13th failed at an exact level of resistance that we talked about. And ladies and gentlemen, we are still there now. Here's Aussie Kiwi, and that level is 109.70. We ripped through it again today, but I was looking at this right ahead of the webinar and it faltered once again. So that is the 2020 high day close. It is still the high day close, as that high has not been taken out yet. Back when we highlighted it back on the 13th, it converged on uptrend resistance. So slope support, a parallel, gave us uptrend resistance. Excuse me, we were there right on that day. Okay, you saw 0.6% pullback, ripped higher again. No closes anywhere near that. And even today's pump fake failed well. I mean, got above 109.70, but we pulled back dramatically. So look, it is one of those trades where you're still running the possibility of exhaustion on the long side. Momentum's been waning, right? The last 4 highs that you've made in momentum in price, you haven't made a new high in momentum. So the exhaustive trade that we talked about 2 weeks ago is basically still there. Here's what it looks like on the near term. I don't know if it's early, or let me say, take a step back. It's too early to rely on this pitchfork. This is from the highs of April 5th. So it's the high, low, high. I was looking at this before the webinar, and I just wanted to highlight a couple things. You know, a 618 of this month's range. Here's your April low, or actually this is the April opens. This is that April 12th low. Gives you 108.80. Forget that weekly open. Here's your weekly open now. I thought I moved this earlier, but there we go. So this retracement is your monthly range. Here's your April open. 618 is 108.70. And the 38.2 comes in line pretty darn close with this week's open. Okay, so I was looking at this right ahead of the webinar today. This is kind of like, this is the moment of truth here. If the pullback gets through the weekly open, 109.11, a 38.2 of the monthly range, I would, you know, to me, in my mind, that would be a clear weekly opening range break reversal, looking for 108.70s, and maybe even the monthly open. This is your, sorry about that, my tags are off here. Right, so something like that. A possible scenario. This is all contingent upon that being high resistance. And if we look at this on the, going backwards here with you, but if you look at this on the weekly charts, guys, it's not quite as compelling from this level, just higher, 110.18. That swing high we made back in 2017 before we broke higher. Decent pivot in price was the reversal close in 2018, faltered in 2020. You know what I'm saying? We're splitting hairs here, but you can envision a scenario where, you know, you kind of make that run towards resistance still. So either way you slice it, the whole premise of the function here is that running into some possible exhaustion here. Hi, Michael. I'm in it short at the 70 handle just because your help. Can you do today? Aussie CAD, Aussie Kiwi. Okay, Martin. bit of a list there, and I'm already late on time, but I'm gonna try to get through, I promise. Okay, so let me jump through this right here. But that's what I'm looking at here with Aussie Key. Okay, are you talking about 109.70 margin? Is that what you're short from? 109.70. Okay, well done, mate. What can I say? It's not, hey, you can give me the credit for the levels. I help you find them. They're not my levels. They're the market's levels, man. I'm just helping you find them, but well played. That's the defense barrier, right, Margin? It's the same level, man, from last week. Any shorts you take, that's kind of the defense barrier you want to see hold, but it is looking like it could actually tilt over to a decent trade near term. So good luck on that one. I'll try to get to those pairs, I promise. Let me just try to get through the rest of these real quick. Ty, let me take some of yours, last three from my list, and then I'm going to jump through yours as fast as I can. Here's NDX, and here's what the NDX looked like as we were leaving before the break. So again, from the weekly charts down, it's very important to mind where we are in risk right now, because people, you know, it's always good to take a break from the markets, guys, and take a step back and return and reassess with fresh eyes. You know, you don't necessarily need to strip the charts down nude, but it's a good, you know, practice every now and then. And, you know, you come in and people are talking about the markets rallying. People are talking about the recovery that we're seeing is the low in place and all this. And then you look at the charts and you're like, what the heck are these people talking about? So here's NDX on the weekly charts. We talked about the risk and the threat when we failed at that 15,334 level. We pulled right back and closed back below that slope. We talked about this threat again for that drop towards basically 13.9, right? Or this level right here, which is that former swing high from February of 2020. So I don't see what people are screaming about as far as, you know, this is it. So let me just put that on paper. Okay, this is the weekly chart. We're sitting at support. I'm not going to get all fancy. There's nothing to write home about. We're sitting at support. Okay, looking at this on the daily chart, get a little bit deeper into the NDX, and you see something like this. This was our last update here. This was the intraday. I'll show you in a moment. But again, the pivot break back below 14, 405, 407 had us looking for a drop towards 13.9, 13.878, and 13.948. Here's what's been happening since the break, guys. Nothing has changed. Nothing has changed. Could we see a little bit more of a recovery? Sure, but you're still working with a break of uptrend support. So you'd still be looking and assuming that that rally could falter. Didn't even get much of a pump swing. We didn't even get above last week's swing highs there late in the week before faltering here today. So, I mean, I think this is self-explanatory. I don't even think I need to get into detail here. Here's what it looks like on the intraday chart, guys, and no change to any of the levels, you know, 1 week later. Support, resistance, support. We haven't been through resistance yet, so I don't know why everyone's talking about the resumptive of the long trade yet. We haven't broken key support, which is where you expect to see the next accelerated drop, so I don't know why everyone's super bearish yet. Gap after gap, yeah, Ty, good example. Gap after gap, yeah. So again, I don't want to, you know, play both sides here, guys, but we're in a neutral stance at support. You know, the basic premise of the trade that we followed last week was that the break of the uptrend was looking to a drop into a key support barrier. We dropped into that key support barrier and we're ranging right above. Now, if we take an objective look at this and I study price action, I say, well, the propensity for gaps to fill is there, but price action speaks louder than anything else could. Here's the gap. The propensity to fill the gap faltered, propensity to fill the gap faltered, propensity to fill the gap with a bigger outside candle here would suggest to me, and again, this is just kind of shotgun, the risk is still for another tilted drop lower. Now, that's just my sensation. That doesn't mean anything, guys. At the end of the day, the range is well preserved above support, so we have to play what we see. And right now, this is a nice coiling range right above support. If you break and shatter below 13,878 on a daily close basis, which we haven't been able to do, I do think you see a rather accelerated drop. Till that happens, you're in the range, right? You're in the range. I do think the SPX has a little bit cleaner looks on this, so we'll take a look at that in a moment. But just for you know, for the update here, Ty, there's no update, or for lack of better words, There's nothing new to add to this setup. The only new thing you need to do here is just readjust the retracement for the new low that we registered a couple of days ago. Opens it up just a little bit, right, for this sort of resistance zone near term here. But that's about it. Nothing else to update new here. All right. Questions after on NASDAQ here. That's number 6. Number 7. Number 8. I guess I'll do this and I'll come back to SPX real quick. Number 8, I have, this was on your list, Ty, as well, silver. Oddly enough, I don't know where my head's at. We're going to do gold, and then we're going to do silver. Number 9, here is gold. Where's our last update on gold? Our last update on gold, it's been a while. Here we go, 7th, okay? And here's what gold looked like as we were closing out that week. So we followed this one at length. We were at a multi-week consolidation. This is going back quite a way, guys, so I don't want to waste time going through that update. But here's what gold looks like now. I'm about to put out a report on this on Daily FX later this afternoon at 12 p.m. Eastern. You guys are getting the update right here. Here's what gold looks like first on the weekly charts, and then we'll drill down deeper. If you had to tailor one weekly chart for 2022 that was one of the most telling, one of the most clearest and well decisive trades, gold would be right up there in the top 3. If you had just this one chart, guys, since the start of the year, literally you would have been just playing ping pong. Okay, here's the breakout early in the year. 2 levels we cited, we turned just ahead of this ultimate record highs, just ahead of that 1618 extension off the lows from last year. The pullback, the first level that we started talking about was 1920, bullish inval, 1903. Since that high on March, or in early March, support, 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 support. We started talking about resistance. Where was resistance? 1988 into 20. And that's where we are right now. It's where we just peaked. So from the weekly charts, all we need to do, again, highlighted region of resistance 1988 to 2000. On support, 1920 into 1903. Nothing changes. Gold on the weekly charts, superbly clean. All right, drill down deeper. Gold on the daily looks like this, okay? Here's the monthly open. We saw a breach of that pivot zone. Again, the first level we highlighted was the median line. I gave you guys 1975, if I recall correctly. And then the level beyond that was 1991, again into 20. That's the 618 off the high. That's the reversal close following the high day for the year. It's exactly where we petered out last week, or earlier this week, before pulling back. So where does that rally falter now, right? Where does that pullback materialize? Well, today, my friends, we dropped right into the objective April open, 1937. Again, not Mike Boutros' opinion, not Jamie's opinion, fact. So the levels are just ridiculously clear. Now, while the levels are clear, momentum has flatlined, and you got daily RSI right at 50, which is not what you want to see in trending markets, very indicative of ranging markets. So where does that leave us? Excuse me, from here. Here's what gold looks like on the intraday. So believe it or not, that is actually still the same formation, guys, okay? Remember that consolidation? Break, ripped into the reversal close. We turned just ahead of the 618, and we're right back down there now. Here's what it looks like. Consolidation, break, whoops. Someone moved my my shaded zone there, but break, ripped higher, and then we just pivoted back below this, checked it as resistance. If this was former support, then you'd want to see resistance there, and that's what we got. So is this a break of near-term uptrend support? Should we be looking for a new low? I would be, save for the fact of where we are, again, on that daily chart with the monthly open. The real tight monthly opening range, if that was a break on the 8th, really tight, that would be support. So I don't want to get too excited on that. I want to see what happens with the 1940, 1960 range. That's the immediate focal range for me on gold. If we breach higher, okay, and we pivot back above 1960, the retracement takes you a little bit towards that slope on the 618 into 74, excuse me, right, 1970, right there. All right, so get rid of 38 too. There you go. Okay, so just a little update there on the levels for gold. There hasn't really been much beyond that, but if this break is legit, we are coming off of slope support, or we are coming off of rather some swing lows, a nice pivot in price. Again, don't take my word for it. Look at my crosshair to the left, a very decent pivot in price. Look for a break of this immediate range, 1974, 1975 would be the bearish inval. That's the level you need to get to mark resumption. Remember, longer term, we're still broadly constructive gold. There is a risk for a larger interruption, a deeper drop towards 1915, this key zone, if this low breaks. So it's all about this range break right here over the next couple of days. Questions on gold? Really nice levels. Really nice levels. So that's number 8 and number 9. So silver goes along the similar plane. Here's what the silver update looked like on our last setup here. The basic premise here was that we were highlighting and yelling to the, screaming to the hills, we're at resistance. That level was right near 2580s, 2594. Okay, you had the 1618 extension off the low. You had a 618 retracement off the high and uptrend resistance back on the 13th here. And we were highlighting red alert as the possibility for some exhaustion off that level. Well, here's what the chart looks like now, Ty, on silver. Okay, we did get a deeper drive higher, but the resistance held. Okay, that was a decent play actually on the pullback. You didn't get quite to that 38.2s that we were looking for. It faltered right ahead of that, but then we ripped into a new high into this week's open before again faltering at the median line. So while the lateral level did see a little bit more of a drive through, a little bit of a piercing here, slope held. Then we saw a break of the weekly open, the weekly opening range lows, and uptrend support. So a little bit more of a crack, if you will, more so even than gold that we saw here on silver. Now, the end of the day level was 2470, 2475, this region here. We do have to just adjust the retracement for the new high. But when you do that, this just came. Oh, did it hit the 786? Yeah. Okay. So let's drop, that's the weekly open from last week, okay? Resistance, support, breakdown target. All right. So same slope on silver, Ty. I thought you'd like this one. Nothing's changed. If the break of the upslope, which was legit and validated here with this move that we saw a couple of days ago, then rallies should be capped by 2540 on the way down. If you break lower from here, 24 proper is going to be your next major level. But right here, right now, yeah, you're going to be an exhaustive move. Completed a 786 of the whole rally. Does that make sense? Questions on silver? Okay, some slope there. Further highlighting, again, major technical resistance into 2540 on this. Okay. Full screen on that, Ty. There's the daily chart full screen on silver. I need to update this a little bit, Ty, so you're probably better off sticking with that scalp I just sent you. And then here's your weekly on silver. One other thing I'd want to highlight on this. Good thing you asked for this. Ty, watch this week. The 52-week moving average gives you 2450. Beautiful. It's the level we were just looking at anyway. Guess what? If we push below that, it will be an outside reversal candle off fresh monthly highs. And if you break below the 52-week moving average, that would be a pretty bearish development. But just something to look for as to the close of the week there on silver. All right, that's 8 and 9. Number 10, I just want to take a quick gander. Again, someone was asking, I think, Marcin, this was you, on sterling Swiss. Here's what it looked like, man, last week. You guys remember? You guys were asking about that. Someone was saying something. I was like, whoa, this was coming off a big support. That's the 2021 swing low, this year's range lows, the lows from March, the opening range low from April. It was loaded. And then we posted a massive outside candle off of support. That rally had us looking for initial resistance near, what was that, 2320s? And then the 618 was 2412, both levels of significance. On sterling Swiss, which is a pair I never trade, but here it is. Looking at it now, man, that was the low. Okay, that ended up being the low. Here's the daily chart. All right, not only did we go there, we spent 4 days pulling back from that key region, but man, once that ripped, here's the rally into the 618. Here's a second day at 2412. Big resistance. 618 retracement of the yearly range. We're there now. Second week. Also the highs that we made for March. Pay attention here. Pay attention here. It was me. All the Swiss pairs were me are on fire. Our marching, man, you caught it with these. It's a very good looker. I'll tell you that much right now. So I had me looking at this last night. Leave it to Marcin to get me on all the interesting pairs here. Here's what the 4-hour chart looks like. I think I gotta take a little bit further back out look at this, but Marcin, for your reference, I was looking at this pitchfork here, which is the low high low off the March 7th dip. If that slope is legit, it would suggest a constructive approach while above this week's opening range low, nails down at 122.70. And the topside breach from here, you get slope right near 25, nice round figure. And then you get the first retracement up here near 25.88. So I'm not like crazy constructive from here. The play, as we noted, was into 24.12. I, ideally would like to get some pullback from here, but that's the breakout levels on the upside. You're at resistance right now. You're at resistance right now. And by the way, just in case, here's the weekly chart. On the upside, the only thing you want to handle on the weekly chart is 25. Why? 2490 is the 52-week moving average. And again, guys, I'm not a big moving average guy. I don't just chase moving averages because they're moving averages. Look at price. Look at what this thing has done around the 52-week, into the start of this year, into the close of last year, into the rally that we broke out in 2020. I mean, it's been insane. So that converges on basic channel resistance right ahead of 25. So I just love that the levels are all converging and all kind of meet in the same sort of spot there, with a little bit higher from where we are right now. All right, sterling Swiss number 10. Number 11, I do have to hit the SPX. Here's what the S&P 500 looks like. We got a little bit of time left. Here's the weekly chart, really first and foremost. The reversal and just turn ahead of the high week reversal close at 46.77. Here's the pullback. This week is threatening an outside weekly reversal. So a little bit different from NDX. And this is kind of what I was telling you earlier. I don't see the justification between everyone getting super constructive on NDX yet, but here's SPX, a little bit more of a justification in the price action we've seen so far this week. Now, again, this would be another outside reversal candle. Remember, SPX tends to play very well with the outside reversal candles. Nothing means jack until the weekly close tomorrow, but something definitely to keep an eye on as we close out the week. Okay, take a deeper look. The SPX on the daily chart looks like this. Came off the 50% retracement after we broke uptrend support. Stronger recovery here. Like I said, way stronger than NDX. Monthly open comes in at 45.49. 618 is right there as well. 45.33. Key resistance on the SPX over the next couple of days. Okay, drop that low day close. You don't need that. All right, intraday. Again, these levels have been updated. Yep, they're good to go. No change. Here's what the SPX looks like now. And here was our last update back on the 12th. Here's a side-by-side comparison with the 2-hour. Okay. So we basically drilled down. We never actually drove that 50 till the following week. Here it is, right into the start of this, close of last week, start of this week. Here's the breakout of downtrend resistance, 618 retracement, a little bit higher, 45.33 is going to be resistance on SPX. One other thing I wanted just to highlight for you while we're here in the room, a possible slope on the upside here that's in play. Too early to really, put too much emphasis on yet, but a possible upslope, right, on the 2 hour gives us resistance right here, keeps us constructive while above 44.30 on the top side. Still looking at 618, you're 45.33. Okay, so the SPX is a very provocative move here. Also, the breakout of the downtrend here gives merit. Not so much, in my opinion, on the NDX. All right. Okay, that's everything I had on my list. Number 11, let me just hit DJI really quick while we're here in the equity front. Number 12, here's the Dow Jones. Looks like it's been a little bit more boring. I always tell you this one gets the pump every now and then when the break plays, but the whole focus on this one, if we can go to our last update on the Dow here on SB, it's been a couple, here we go. Here's our last update on the Dow. The only thing I wanted to highlight there was 34,188. Okay, here was it. Here it was. This is the weekly chart. Here's the daily chart. Right here. 34. This was it's the 320 on the way up, 38.2 on the way up. So after we rallied, was a pullback into that support. We wanted to see what happened. Look at this, guys. 2 weeks later, we came right back into that. We've been sitting there for weeks, and here's the pump fake higher. I don't like the trade. I don't like the trade. If we break the highs, the only thing I have on this is 35,768. That's the February high close. So if we break this objective, swing high, which is again the April range highs here, that's your rally. But there's not a confined space, a well-defined slope. You could assert that this was a breakout of a near-term channel. I get that, but even that seems to be extended a little bit. I'll have to spend some time with this chart, Ty, but I don't really feel comfortable giving you a level of which, to kind of really eye on this. The objective snap approach would be like basically the monthly open, 34,740. That would need to hold support if this breakout's legit, like right here. Does that make sense? So something like that. Other than that, it's just not my cup of tea here. You know what I mean? All right, so take that for what it's worth. All right, so SP, I got you on that. DJ, I got you on that. That's number 13. Number 14, here's a quick look at crude. Again, not my cup of tea here. If we take a look at crude from all different standpoints, we're still in what I still want to call that hangover effect, where you haven't chosen trend, you haven't invalidated trend, but you haven't necessarily validated the completion of the correction, in my opinion. Remember, that low we made last week was all we were asking for. If you recall, heading into the start of last week, we were looking for a new low, just to complete a 1, 2, 3 type of correction. We spiked just a hair lower and then made an outside reversal candle last week. That shifted the focus higher, true, into the start of this week. But what happened? We started this week, pumped higher, and then just collapsed again. So look, here's the daily chart on oil. Even from a monthly opening range standpoint, that break that we saw on the 14th should have given us the charge. It didn't. I think there's just a lot more consolidation here, Ty, before you clear things out. So nothing really to update here on crude. Here is the scalp that I showed you a couple of weeks ago, or I guess this was last week. Did break the uptrend, dropped into that 100, and here we are. So I want to let this clear out. I'm not interested. Patiently waiting. Ty, I think that patience will pay in this one. Everyone's interested in, especially these high headline events, guys, with everything that's been going on from the geopolitical standpoint, inflation, Ukraine, unfortunately, and a trade like this, you need to wait for the technical clarity because the headlines are just going to rip you apart. Silver as well, patiently waiting. Yes, I agree. I agree. So that's 13 and 14. Here is, I just wanted to highlight Bitcoin real quick, guys, because this is going to be making headlines. And the level I talked to you guys about last, I guess I want to say like 2 weeks ago, was 38,788. Do you guys remember it? It's the 618 of the rally from this year's low. On the initial drop this month, we failed right ahead of that. 4 days ago, we not only clipped it, but we posted an outside daily reversal. That is constructive. Near term, looking for 43,390, 44,533. Okay, that's going to be your next sort of big level here on the upside. And look for a reaction there if we get it. But all things held constant on the near-term approach. Here's the scalp that I was looking at. Looks decent. Looks decent for another push, or at least another attempted push towards 44.5 here on Bitcoin. So that is Bitcoin. Marcin, I know you have all these crosses, but let me see if I can get to some of this. Sterling CAD. Oops, wrong charts. Okay, break multi-year lows. So I feel like I've seen this before. This is just a multi-year consolidation, guys. I obviously haven't looked at this in so far this year, at least the last couple of years. Looks like you just broke a multi-year break or multi-year range move to the downside here. 618 was a very instrumental break. And since the high, I would just take a look at something like this. And the 618 should probably be where we are right about now. We just broke below it. Okay. Looks like a downdraft. Looks like you broke the monthly and yearly opening ranges with that move. You had an outside reversal off resistance. This is really nice. Honestly, or right before this, I would have no interest. But this break certainly, and the close does shift the weekly focus for a move down towards 161. Now, at the end of the day, this is pretty tail end already, Marcin. It's kind of stretched. So I wouldn't be chasing it from here. If you're holding shorts from anything northbound of 65, I'd go break even or better with a move towards 61 as your next sort of key level, 61.20s. New positioning from here, it's a chase any way you slice it. Yeah, I'd have to come back to this one on you for the near term, but it looks tired. And if this is your monthly opening range, that's not what you want to see, Marcin. Monthly opening range break on a trade like that should rip lower. So I'd expect some pop back, some give and take here, maybe some corrective motions higher, ultimately to fade for that next drop towards 61 and change. I hope that helps. Let me just write down those lists here. Aussie, CAD, Sterling, CAD, Euro, Yen. Can you please do updates if you have time to the CAD Swiss, Aussie Swiss, and Kiwi Swiss. Interesting. Okay. Marcin, I will try to take a look at these. Yeah. Anytime you guys have a pair that you're following that we may not be talking about, do feel free to throw it on the message board. I try to keep you guys updated with what I'm actually trading, what I'm actually getting involved in, what I'm actually tracking. That's just for clarity. That's just for all of us to be on the same page. And, I could throw out charts on every pair you could imagine, guys, but that's not going to do you good or do us any good. So I want to try to keep us on what's moving. Now, it just so happens that you caught a flyer here, Marcin. and all these Swiss crosses making a move. So I'll take a look at them for you. I can't promise I'll get all of them on the updates for you, but I will do my best to give you a clear and coherent look, at some of those crosses. Very interesting. This becomes a very interesting trade. The pound Swiss that we talked about earlier in the session was very interesting as well, because that basic, pump and break there to the upside, for me, is pretty telling. And I think that it's worth definitely keeping an eye on these similar exotics that are kind of breaking away as we get deeper into the week. Euro yen, I will take a look at here right before I close out the session. I am over on time, but this is a trade that's been broken higher. Most of these yen crosses, guys, are going to look like this. So I bring this to attention for the guys who are already in it, not for the guys who are looking for new positioning, because again, I think this is a chaser all day long. But on the weekly chart for dollar yen, look at where that just peaked, guys. I haven't touched this chart, by the way, since I've gotten back. We just peaked at a slope we've been watching for how many years now? How many years? This is a pitchfork off the low from 95, 2000, 2011. All of the slopes you see here are derived off the same parallel. Resistance, resistance, break, support, break, resistance, resistance. We just hit it today, or this week, I should say, on dollar yen. Euro yen, similar, maybe a little higher, but it's a slope range we've been watching from the original slope. So anything's fair game for an exhaustion high in this region. My point being, all the yen crosses are extended. All the yen crosses are coming into extremes as far as trend is concerned. Don't fall in love with it. Don't fall in love with any of them. All right. I'm way over on time. As always, going to wrap it up here. Look forward to getting back to a full schedule again next week, guys, on Monday morning on the free session on Daily FX, and right back here on SB Tuesday and Thursday. Best of luck trading. Keep it light into the close of the week, and we'll kick things off back on Monday. Have a great weekend, guys. Cheers.